It's also set in train something which is a little bit more disturbing, is that we've seen a drop in inflation expectations. So if you look at what's called the five-year forward, which is the market's pricing of future inflation, that number has been falling even as Donald Trump was spending all that money. So he's not created an environment where we've got a bit of inflation. And I have to say, at times in the last couple of years, we'd hoped there was going to be some inflation. So you go and buy a few index-linked bonds and other asset classes that would do well whilst inflation was accelerating or surprising to the upside. More recently, even that is starting to come down. You know, the Bank of Japan, God bless it, has been trying to create inflation for 15 years. But if your population is going down, it's very, very difficult to create that inflation. And in fact, many of the surveys of consumers still say there's a huge price sensitivity. I mean, I've come from the Middle East. I left there in November, and I went back around December time just to pop my head in the door of Dubai Mall, which is one of the biggest in the world. Government had announced all shops got to show a 50% cut in prices, and 70% of the windows around the shopping mall, 50% off. By the way, I'm not here to sell the next holiday to Dubai. But that was the price point at which people would go and spend their money. Take 10% off. No, not interested. Buy 5, get 1 free. Not interested. Give me 50%, I'm in the shop. But who's going to benefit from 50% off? The consumer, but not the company that's manufacturing, and certainly not the retailer. We are very price sensitive. And that's because there's a lack of distribution of wealth, and we're basically watching every penny across the world. This means that you should not give up on government bonds. I know that if we go and talk to people and say, I'm going to put a good measure of your portfolio into government bonds, they say, what, at 2%? What's 2%? Well, it's better than -5. Yeah? We've got to put our money somewhere. Do you want it on deposit at a negative interest rate in Europe? Yeah. These interest rates that you're seeing in government bond markets are still, at this point in time, maybe 20 or 30 years from now, less secure because there's so much of it. But at this point, these are the building blocks of securing your wealth in a time when inflation is low. And in fact, in London last week, I got asked, well, Gary, I need 7%. I said, but when did you get 7% last on a long-term basis in a secure way? And you go back, it's when inflation was 5 or 6. So if you're getting 2 and inflation is -1 as it is in Japan, you're getting a 3% real return, which means your spending power is going up, not down. And we're here to maintain and grow your spending power, not give you crazy numbers and taking inappropriate risk.